Hello. Today I want to talk to you about the alternative minimum tax, or sometimes acronymed AMT. Now, if you've been around CPAs for any amount of time, you know that we hate the AMT. So do most Americans. In fact, so does Congress. But you know why they won't do anything about it? Anything real about it? It's because the AMT is the number one or number two income generator in the United States government. It generates way more tax dollars for our government than the tax code does. So you think maybe you owe a lot in income tax? You might, but that is nowhere near as much revenue as the government will collect if they can tax you on the AMT. The alternative minimum tax is just like it sounds, it's alternative. What that means is if you are in a certain tax scenario, you and all the stars come together, unfortunately for you. The IRS will look at your income tax return run the regular way, and then they will run your income tax return under an alternative tax return scenario. And whichever one is higher is the one you pay. Now, the AMT was created way back in the 50s, I believe, as a way to help certain really wealthy American families, the Rockefellers, those type of institutional families from the old days in our country's history, who are just millionaires and maybe billionaires who can take advantage of all kinds of loopholes that the average American cannot. So back in the very young days of our tax code, the Congress back then implemented the AMT as a way to help some of these more wealthy taxpayers who have access to some really nice loopholes pay their fair share. The problem was, until a few years ago, the AMT was never indexed for inflation. So it started hitting a lot of middle-class Americans. In 2012, Congress did ease some of the pain of the AMT by tagging it to inflation. They indexed it for inflation. That stopped it from exploding, but it still packs plenty of a wallop if you don't watch out. The problem, by the way, is that there's very little tax planning you can do to circumvent the AMT. There's some, but not a lot. The AMT can definitely mess up your year-end tax planning moves. It can boost the effective tax rates on your dividend income and your long-term capital gains income. Some of the classic regular tax planning we do for our clients is neutralized if they're in the crosshairs of the AMT. The AMT is first owed whenever it exceeds your regular tax. Now here's how it works. It's 26% on the first $185,000 of income of alternative minimum income, the special income run under this alternative scenario, and then it jumps to 28%, just two tax brackets. Now, here's the problem. A lot of the deductions that we ask our clients to let us help them plan for regular tax, including some of the very lucrative tax-deductible itemized deductions, such as state and local income taxes, most of our miscellaneous itemized deductions, and some medical expenses if you're age 65 or older. Also, you don't even get your standard deduction or your personal exemptions allowed for AMT. Now, here's the other bad news. For some of our clients, they come to us and say, hey, look, my company is letting me have incentive stock options. And I tell them, well, it depends on when they're taxable. With AMT, ISOs, incentive stock options, are going to be taxed or subject to the alternative tax when you exercise them. Also, some clients, for very good tax planning reasons, buy municipal bonds and, private activity municipal bonds. Private activity municipal bond interest is subject to AMT. Also, if you own a business, one of the key tax planning strategies we do for business owners is to possibly accelerate depreciation on assets a business owner may buy. Well, for AMT purposes, depreciation is strung out over a much longer amount of time, so your depreciation deduction each year is lower. And finally, if you invest in drilling ventures to shelter some taxable income, this is more or less for our accredited investors, intangible drilling costs are not a deduction for AMT. With all that bad news, would you like a little good news? Some personal deductions and credits are available to knock down your AMT. The adoption credit, the child tax credit, the American Opportunity, the Old Hope educational credit, and the dependent care credit are available to help with your AMT. Also, if you have some foreign tax credits, most of the AMT can be sheltered with that. Ladies and gentlemen, I wish I could tell you some good news. There's very little we can do about the AMT, but there is some planning we can do. If you're interested, contact us or anyone who hates the AMT. Thanks for listening.